Hello everybody, Brian here from quantlabs.net. I just posted a new video on my YouTube channel. It's the web stream that I did for tonight's webinar. It's called In the Trenches with Cryptocurrencies. It's about half an hour. So if you want to watch it, go ahead. But as a result, if you watch it, you would think that using the previous set of indicators and technical mumbo jumbo that you would not be able to make money in cryptocurrencies. Well, I'm going to show you what changed everything for me in terms of the technicals. First of all, let me just say with Binance data, the only cryptocurrencies that I've mentioned in this video here, the only exchanges you can short on are either Bitfinex or BitMEX. With Bitfinex, now you need $10,000 to start with to trade with them. So, from my point of view, that's a little too rich for my blood right now. But I'm going to show you what I've done to circumvent that and some of the improvements I made on the chart. So first of all, if you looked at the regular long stuff in here, you'll notice there's virtually nothing's generated. There's no longs. So as a result, that's all because of their, Binance or Bloomberg saying, well, Bitcoin's pretty well collapsing and continues to collapse. That's as of Friday, but there's still some opportunities out there, and I've created this new document called Crypto Long Based on Trend. So what I've done is in the spreadsheet, I've added a few more columns, just to add for confusion, of course. I do now a slope using linear regression on all the data. And I've also changed it where in the chart you'll see I've stripped out and I've only kept the last 200 days of trading on all the cryptocurrencies. So I've shortened it down from about 1,000 days to about 200 days. So I'll take us roughly just over 6 months. In this case, since the beginning of the year, because it's June 12th. So what we have here is we have slope, R value, P value, standard error, and then the closing price, the last closing price. And that is what I'm collecting, but I'm not doing anything yet with this data, with the exception of slope. So the slope, that is right now my highest priority in terms of setting which crypto pairs should be traded. So obviously the steeper the slope, the more likelihood you want to trade it. On top of, I'm still wanting to use the lower volatility, just more predictable in trading and analyzing and forecasting. But the other thing is, I originally when I just didn't have this filter in terms of volume, I just left it, and it would generate probably over 100 different pairs that you could trade based upon the criteria I've already described. But with the volume, what I've done is now I've only I will only filter out anything that trades under 45 million, or is it under 10 million. So that takes away a lot, and those are obviously the more popular and more liquid cryptocurrency pairs to work with. So as a result, I've created this new document called Crypto Long Based on Trend. So when we go in there, what we'll find here is some new things. So here I've reduced the number of trading signals for buy signals from, let me just count them up here. It's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, so these are for longs and long only, because that's all we can do with Binance. So when you go through the data here, we have our group averages, which is of course We get the volume mean, the volatility, the slope, the p-value, r-value, and the standard error. And in there, we then are able to see our best cryptocurrency pairs to go with. So here, we can always compare our standard deviation against the group standard deviation or volatility to see if we are we could follow the same pattern as before, where our individual standard deviation or volatility is below the group volatility. Now here in this chart, or also I display the volume, so you can see it's quite high for this one for Storm BTC, but here you can still see no signals, but there was a sell signal here, but overall we still have a trend up, and then we still use the Fibonacci levels to make sure we're within the gold zone of 0.382 and 0.618. Also, that really helps here is the ability to see more positive returns, daily returns, than negative returns. So that's how we've broken it out. So pretty well all the cryptos here are going to have a positive trend. And excuse me, is that this can somewhat work, but I'll have to test it further. And that's what we'll do at the end of this. But here on this next one on IOST BTC, here we have another sell signal, but yet we have an uptrend and below, and then we also have more negative. Well, I don't see if we have any more, nothing positive in daily returns, and we have some outliers here, as you can see. That one I wouldn't go with at all. Again, we have this one, XVG BTC. The volatility is much higher than the group. The volume's quite good. Again, we see that everything's tightening up here on the moving averages, so there might be some potential turn here. Trend is still up, but here's a nice thing. Again, you can see that there's a higher concentration of returns. Now, I need to reiterate, this is all of the returns from what's downloaded, I guess, let's say 1,000 days, but everything else is up to 200 days. So you can see here it's at the beginning of the year, in December for this one. So our next pair here, we got the GTO BTC. Again, slightly higher than volatility. Volume is very good. We're in our trade range according to Fibonacci and whatnot. Here we have a slight trend up, below trend. And again, we have some nice outliers here, positive, but there's still a higher concentration of negative returns. Our next one here, ENG BTC, range bound again, good volume, below our group volatility, but it's not within our Fibonacci price level. The trend looks pretty good. You can see it's slightly above the Fibonacci. But here is the interesting part. There's some more positive returns, slightly more. So that might be a good one to go with. Here we have a higher volatility for TRX BTC. Volume's very heavy, which is good. Fibonacci is overpriced. Trend is not a lot steeper than most other ones. It was very close to our trend, and again, you see a heavier concentration of negatives, but that one's a little tough to say. Our next one here is XRP BTC, heavy volume. Volatility looks good, so it's a little more stable. We had just a recent buy signal here. Trend is slightly up and just slightly below our trend line, which is good. And definitely we have more positive returns lately. So this may be a decent one to go with as well. You can see the difference between this and what I had before. Next one we have here is the XLM BTC. Standard volatility is below the group. Volume's fairly heavy. Fibonacci's slightly, well, it's quite overpriced if you ask me, but it's below, just slightly below trend, and it's tough to say where that's going to happen on the moving average cross signals or signals. And again, slightly more negative returns, so I'm not sure if I'd kind of like want to deal with this one. This one looks good because why? It generated a bullish pattern, harmonic pattern, the bullish bat, heavy volume. It's very volatile though, above trend, which is pretty good. Again, it's slightly overpriced, well, majorly overpriced, but here's the thing, all of those negative returns, not something I would probably stay away from, even though it looks good. Those statistical daily return distribution kind of scares me if you ask me. Next one is, I think this is our last one, ZIL BTC. Volume's really good, very low. Well, I say the volatility is quite low. It's lower. It's not within our Fibonacci price level, which you can see here, below trend. But here's the interesting thing: there's more positives in the daily returns, so that's something worth looking into. Another one, iOS T Ethereum, and then again below our group volatility, very heavy volume. Lately it has been a sell signal. Looks like it's been a solid downtrend. Positive return, but below trend, below our Fibonacci, and again solid negative return, so stay away. Another volatile one for ARN BTC. Volume's not as strong as what we've seen before. Below trend, slightly above the Fibonacci levels, and again, look at all the negative returns. Stay away. We have another TRX Ethereum, above the group volatility. Volume's pretty good. Fibonacci's got within range, so it's not a bad trend. It is within our Fibonacci levels, and this one's a little tough to say. I'd say it's slightly more negative. Now again, you can always check these in the spreadsheet. This one, ZIL Ethereum, this one's really good. Volume's not so strong. It's not as volatile. It is slightly overpriced because it's over our golden triangle. It's below trend. There was a recent sell signal. Yeah, it's quite overvalued historically. And again, there's just so many negatives. So this one I thought was pretty good. So overall, you can see what works and what doesn't work with these charts. Again, we can't short with Binance, but this seems to be a lot more useful than previous charts and even what I put up in the webinar earlier today. Hopefully this will help you out, and we shall talk to you later.